Hi, ladies and gentlemen. My name is Julius Olutok once again, and this is Dominion Wealth Zone. Welcome once again today. I'll bringing you something very, very important today, something very essential, something that you need if you want to be an astute investor. If you really want to take this investment journey to another level, you really need to listen to this, what I have to offer you today. And what do I have to offer you? I'll be talking on investment strategies. Investment strategies. Please do note, everything I'm sharing on this telecast is just for information purposes. If you do want to take financial steps, you need a financial advisor, and I'm not a qualified one. I just do this for fun, and I enjoy what I do. Investment strategies. Now, when we talk about investment strategies, we're talking about a combinations of strategy that you need, a combination of strategy that involve discipline, skills, expertise, and understanding of the market that you need in order to be able to bring it all together and be able to use it in order to have success in your investment journey. Please do note, these are fundamental and essential rules, and you cannot go through a shortcut. You need to pass through these rules if you really want to have a good chance of being successful. And here are they. Number one, set clear goals. Set clear goals. Now, before you begin your investment journey at all, you need to define what are your objectives. What do you want to achieve? Do you want your capital to appreciate? Do you want to generate income? Do you want to preserve wealth? Do you want to go into real estate? You need to have a clear goal of what you want to achieve before you want to start this journey. Some of you want something for residual income, extra income while you want to keep your job. Some of you want to quit your job. You want to fire your boss. In other words, you want to retire from your job. You want to resign, and you want to go solo. You want to go on your own. I took this journey about 14 years ago. I want to go solo. I've been doing it over and over and over again before then. But 14 years ago, I came out of employment, and I said, I need to take the bull by the horn, because whatever is not specific cannot be dynamic. So you need to set clear goals. That's number one. The second step is to do your own research. Do your own research. Before you commit a dime of your money into anything, research the underlying fundamentals. What are the things I need to do? What is a market trend? Number one. Number two, what are the requirements financially? What are the requirements time-wise? What are the requirements knowledge-wise? And what are the competitive advantages or competitive positions that you have? You need to do your own research and look at the growth prospect of what you want to do. In the next 10 years, where will this company be? In the next 5 years, where is it going to be? Can it be intergenerational? Can I hand over this to my kids? So you need to do your own research, and you need to be sincere with it. Number three, you need to seek professional help if needed. And now, in this time and age, seeking professional help is not really difficult. It's not too difficult. And I'll tell you why. You might not even need to pay for this, because all over the internet, you have one or two videos like what I'm doing today. It's a professional help. So you have one or two videos that people have released about their journey, the experiences they have had, and that's like professional help. And if you do have some money, you might need to go and seek professional help that is tailored along your needs. I mean, when I got into my financial journey at the time, I saw professional help. And one of the guys I contacted, He used to work for one of the main banks for about 30 years, and he worked in the investment arm. And he gave me some clue that it's really helped me, and it's really helped everyone around me about investment. So I would say you need to seek professional help. Very key and very important. Number 4, invest for the long term. And I repeat myself again, invest for the long term. You know, most investors will make the mistake of wanting to reap the rewards in a short term. Now, in investment, we have short-term strategy, medium-term strategies, and long-term strategies. Have made so much mistakes and trying to make it in the short term. It's never going to happen. You could have some little successes, but it's never going to happen. So you need to invest for the long term. The market is generally important, and you cannot really time the market. People talk about timing the market. No, you can't time the market. You can only position yourself to looking at the end of the market. Time is important in this market, and avoid making mistakes, what I call impulsive decisions. A lot of us make those decisions. You see a little difference in the market or in your investment, and you make a mess of it. So look at the long term, focus on the long term, and look at the growth potentials. Having said that, I'm not saying don't take your profit if you're investing. Maybe you buy a property, you want to resell it. You could do that in the short term, but long term gives you better rewards. Number 5, manage risks. Manage risks. That's very important. Assess and manage your risks according to your risk tolerance and investment goals. One of the things I do for people that follow me or people that I train is that I make them to do a test. It's not an assessment. I know how to see their risk tolerance. And it's based on your risk tolerance. That's how I'm going to advise you the type of investment you need to put your money in. There's some people you can only put your money in ETFs based on your risk tolerance. There's some people you can put your money on probably properties, or you can buy individual stocks, or go and get bonds or some other investment platforms. So manage your risk based on your risk tolerance. Look at where you are, what you want to achieve, and how well you can manage your risk. Number 6, stay informed. Stay informed. Ensure that you keep yourself updated with relevant news, indicators, and market trends, and what is going on in the financial sector. I tell people that it's better for you to read the Financial Times, to listen to news on Bloomberg, watch other financial telecasts. These are better for you, and this will give you good knowledge of investment and where you are. Number 7, control your emotions. Avoid taking rational decisions based on your emotion. Avoid panic buying or panic selling. Like today, Bitcoin is rising so well. Bitcoin, I think, is about $71,000 today. And a lot of novice or people that are called ignorant when it comes to finances, they jump into it. No, without having a strategy, without knowing where is Bitcoin going to be in the next 2 years, where is it going to be next 3 years. A lot of people put in their money into Bitcoin in 2018 when Bitcoin was about 5,000 thereabout, and they relaxed. And that's about 6 years down the line is £71,000. Now, most young or new investors will not be able to hold on for so long, but astute investors will know market goes up and down. The market forces goes up and down. So they're going to wait, and they are not going to react impulsively to market fluctuations. Fluctuations are bound to be in the market. day in, day out. So you need to hold on to your emotions and don't allow your emotions to lead you. That's why it's good for you to have a mentor. Number 8, monitor and review your portfolio. It's very essential and important for you to regularly monitor and review your portfolio day in, day out. Regularly reviewing your portfolio enables you to align your position with your goals and your risk tolerance. In other words, you'll be able to rebalance your portfolio as needed and to maintain your diversification and asset allocation grants. You'll be able to know what to move from here to there and what to move from there to there. There are sometimes I look at my portfolio and I look at some of the investment that I have and I pull some of them down. I mean, I crash them and I reinvest that money into another part of my portfolio. So it's very, very good. It's very essential for you to monitor and to review your portfolio. Number 9, consider costs. Consider costs. This is very important. Be mindful of your investment costs, the commission, the taxes, and every other cost that are associated with your portfolio. Some platform, if you're into stock trading or you're into crypto trading or you do forex, some platform charges more than the other, and so you need to look at costs for every investment. Even when you're buying properties, you need to look at costs. Look at your solicitor, how much are they charging, how much your mortgage broker charging. You need to look at all those costs because they all add up. A lot of people don't think, oh, it's very small. No, it's not small. They add up. One of the best investment platform with one of the lowest stocks is the Vanguard. At Vanguard, they have one of the lowest stocks, and I go with them because they're very, very, very good. And finally, number 10, diversify your portfolio. I repeat it myself again, diversify your portfolio. Spread your investment. That's what that means. Spread it into different classes of assets, stocks, real estate, bonds, and all other investment industry into different geographies. Don't invest only in the USA market or in the European market. Try Chinese market. There are some wonderful, great stocks in Chinese market today that I bet you in the next 5 to 10 years, if you invest in them, I'm sure you're going to be smiling to the bank at the end of the day. So diversify your portfolio, because sometimes if the European market is making gains, Asian market could be having losses. You understand? So that's the way it works in investment. So diversify your portfolio and do not forget to keep an eye on it. Remember, as I begin to round this off, investment or investing includes taking risks. It includes taking risks. So you should make up your mind you are in a risky business. One of my teachers said business means the pooling of risks. So in investment, there are no guaranteed profit. If anyone guarantees you 100% profit, they are lying. They're fraudsters. You cannot be guaranteed of profit. Anything will happen. As I'm talking now, things can go the other way around. So you need to make up your mind that I'm going to follow these 10 fundamental steps and I'm going to be disciplined with them. This will enable you to increase your chances of having success and mitigating your losses over the long term. In investment, losses are definite. However, what we do in investment is to ensure our profits are more than the losses. If you're into investment and you have a 90% profit and 10% losses, then you're breaking even. But when you have about 70% losses and 30% profit, you're not doing well. Even 60% profit and 40% losses is not the best. So the best is 80-20, 80% profit, 20% losses, or 90-10 in favor of profit. I wish you success. Please do note, like I said, everything I've shared on this telecast is just for educational purpose. Please do like, share, and subscribe to this channel. and hit the notification button so that anytime I release any video, you can benefit out of it. And do not forget to look forward to the next episode. Thank you and welcome. See you on the other side. Cheers.